Good morning, everyone. This is Daily Trading Analysis with the market forecast for today, 22nd of November. Today, we don't have too much economic data releasing. After the market opened 30 minutes at 10 a.m. Eastern Time, we have Richmond Fed Services and Manufacturing Indices releasing. I don't expect this data to affect too much the markets, perhaps some volatility around that hour, but I don't expect this news, this data to affect a lot the markets. However, starting at 11 and throughout all the afternoon until 3 p.m., we have three Feds talking. Fed Master, George, and Bullard are speaking. The first one at 11 a.m. in the morning, so be careful because sometimes in these speeches, what is said matters a lot. So Fed speaking during the afternoon, also after lunch, you may see a lot of volatility into the power hour during George and Bullard speeches. So be careful, watch out for that volatility, and be prepared for that. But apart from that, let's talk about the context in which we are right now. This is the 1 hour chart of Nasdaq NQ. We have this support that we broke yesterday during the choppy day that we had. So we have this ascending that got rejected yesterday. We got the highs at 11,700. So we rejected that and we are consolidating in this pivot and in this pivot right in the middle. So we are here waiting for something to be said, something to happen, news, whatever matters for the market. We need information to escape this consolidation. As you can see, we have also descending resistance coming up from Tuesday last week. The high that we got last week high is 12,118. This descending resistance formed a wedge that we broke out, not too much because this pivot is remaining there, but we are consolidating in this channel. Let's change to the 5-minute chart. You can see that after yesterday's super choppy day, we went down a little bit that channel and we came again in. So this 11,550 broke down, but we quickly rejected, and it got super bought up, and we established this pre-market low. And look at this blue dot line is the last week low. So last week low is strong support for now. We are in the middle of the range right now, in the middle of value also. Point of control from yesterday is right at settlement, and settlement is 11,600. So we are still in value and in range above settlement and rejecting lower pricing. This, to me, it's more or less bullish. This is my opinion, but I think we are holding levels. We only need a little push from something happening, economic data, maybe some breaking news, something to start breaking to the upside. We are watching this pivot from yesterday at 11,630 for NQ, and I think this is a nice pivot, react and to wait for a trigger and for a move up, and maybe the target would be yesterday's high at 11,700. So that would be the plan for me at least, and ES is also at these levels holding more or less. If we change to the 1 hour, we are still dealing with this consolidation that we have here, and this pivot that we broke, we are more or less holding, and these blue lines are daily levels that we are trying to break and to consolidate. The ES is actually holding quite nicely right below the 200 EMA on the daily. So we broke the wedge and we are trying to hold, barely hold, whatever is needed to hold, because these pivots low here are quite important. Markets are waiting, trying to consolidate without information. So take that into account. Dollar. Dollar, after a strong move during the overnight, you can see overnight was pushing. We reached almost 108, 108, and we are rejecting. So maybe this weakness on the dollar might push the markets. I think so, because yields are also going lower. We are trying to break this pivot in here in the 2-year for 4.5%, and in the 10-year we are chopping around more than in the 2-year, but the overall picture for the 10-year is also rejecting this zone that we started to see weakness at 393%. So I would like to see dollar and yields continuing the red. Right now, yields are more than 1% in the red, and I would like to see continuation of and seeing more weakness on dollar and yields for markets to be able to push up. Apart from that, stocks already open. Tesla, look at this move. I shared with you this morning that Tesla is breaking March 2021 lows. Watch out for that, because Tesla is being impacted due to Elon Musk's poor management of Twitter. I think a lot of traders are punishing Tesla due to that, but watch out, because this is not looking good. Yesterday we got 6.84% in the red for Tesla. Right now Tesla is bouncing a little bit, but don't get too confident, because fundamentals didn't change and we can see a small rallies of that. Tesla is looking quite weak. For the rest, Apple slightly in the red, holding yesterday lows. Microsoft the same after yesterday's super choppy price action. We are more or less at that level. And Amazon is in the green, and also Google. So watch out for Amazon for consumer discretionary sentiment. We hold yesterday this white. Look at this. We filled the gap yesterday and we are trying to bounce off that. If we check the 30-minute for Amazon, we can see that we flashed yesterday and then recouped a little bit for this previous support is now resistance, and we are right there. So Amazon is quite special. It has a lot of consumer discretionary sentiment priced in the stock, and this is something that right now is not strong. So consumer discretionary, as you know, XLY is super weak. So Amazon is feeling the pain due to consumer spending decreasing a lot, demand destruction, remember. So we can see some bounce right now on XLY. We need to see a little bit of strength to the upside. The same for financials. Actually, yesterday financials did quite good. That sector fund and utilities staples also quite good. This is what is affecting the overall sentiment. Staples, healthcare, or in the green, utilities, these are defensive sectors. So if we can see these sectors start again to go lower and not the overall market not being so defensive in this rally, we can see strong moves to the upside, at least for this week. But I still think we need some sort of bigger catalyst, and perhaps we have to wait for tomorrow. I think tomorrow will be a good opportunity for the market to move up. Wednesday, tomorrow we have durable goods. Okay, jobless claims, this is good. Continuing jobless claims, we need to see more people losing jobs. This is the reality. We need labor market to start seeing weakness. New home sales at 10 a.m. But the big thing is FOMC minutes at 2 p.m. So I think until tomorrow, and after yesterday, we can still see a lot of choppy price action, but the markets are not looking bad. At least for today, we are holding levels, dollar is weakening, yields are pulling back, so perhaps we can see some sort of move to the upside, or at least consolidation on these levels for a move later tomorrow based on economic data. So this is my expectations. I think we can have a good probability of higher moves the rest of the week, because right now we are just chopping around and trading sideways with a lot of sluggish price action and sloppy price action. So be careful, be patient, and if you don't want to trade, it's okay. Just wait for your opportunities, wait for the market to react to something, and manage your risk. As always, thank you for your time. If you have any questions, you can comment down below. If you found this video useful, please remember to smash the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day for market podcasts like this one, market updates at noon, and market recaps after market close. I appreciate your time and see you in a couple of hours with the market update. Remember, discipline and risk management are key for success more than ever in this choppy market. Stay safe, everyone.